Good Friday afternoon, folks, and welcome to this week's version of Weekly Commentary, and what a week it has been. So right now, markets are doing something that doesn't seem to make a whole lot of sense, at least at first glance. I mean, we've got escalating conflict in the Middle East. There's uncertainty around the oil supply, getting mixed signals from global leaders, and yet stocks are going up. They're not crashing, not even pulling back, at least not this week. So the real question is, what is the market seeing that most people aren't? Well, let's break it down a bit, because this is one of those moments where it seems headlines and reality are a bit disconnected, if not completely disconnected. On the one hand, the economic data actually looks pretty solid. Most of the indicators we track, things that usually help predict market direction, they're still overall positive. But of course, none of that is driving the market right now. This market, currently, it's being driven by one thing: geopolitics, specifically the war in Iran. Just a couple of days ago, Tuesday, markets were bracing for worst case scenarios. You had headlines talking about catastrophic outcomes, like happening within hours. And somehow the market still closed higher on Tuesday, eked out a fractional gain despite threats of entire civilizations being wiped out. So that alone should tell you something, and that is that the market is resilient. It seems like it's chomping at the bit for an all clear signal. After the markets closed, we got what looked like an all clear signal, at least in the short term, and that is a reported 2-week ceasefire between the United States and Iran, including opening the Strait of Hormuz. Futures immediately took off. Next morning, Wednesday, markets opened up about 3% and stayed there all day despite conflicting news during the day. Here's where it does get interesting, because while markets were rallying, the actual situation on the ground was still messy. Israel was continuing military operations. Tensions with Hezbollah were escalating. Iran has been sending completely mixed signals about this ceasefire. At one point, their foreign minister literally says, quote, "We need to keep fighting for our people," close quote. At the same time, there are reports that they want millions of dollars per ship, basically extorting countries just to allow safe passage through the strait. It's not exactly what I would call a stable situation. So fast forwarding to today, Friday, the ceasefire doesn't really even look like a ceasefire, at least not under the terms initially laid out. And Iran has put out a list of demands before they'll even seriously negotiate, demands that make the Treaty of Versailles look reasonable. And it's worth noting that treaty was written by the victors after total capitulation of the enemy. Kind of ridiculous. Strait of Hormuz, where about 20% of the world's oil flows, is still heavily restricted. Traffic is way down, 15 ships on Wednesday, none containing oil versus the 100 ships the day before the war started. And control of that region is currently sitting with the IRGC, a designated terrorist group. Short term, therefore, if you're looking at this purely from a risk perspective, it doesn't appear to be a bullish setup. Yet, markets keep pushing higher, just slightly below all-time highs. Even small headlines, like on Thursday, like potential talks between Israel and Lebanon, were enough to move markets higher. So what is really going on? Well, here's the key idea. The market, of course, is not reacting to what's happening right now. It's pricing in what it thinks will happen next. And right now, the market is betting on some form of quick resolution, not immediate, but sooner than later. A resolution, not perfection, not total victory, just stability. Because even if we get a partial resolution here, some stability, oil prices likely come down, uncertainty fades, and capital flows right back into equities. That's why this market feels a bit like a coiled spring to me. But let's be clear, short term there is still risk. A full clean resolution, that's frankly hard to see. Historically, outcomes like that, complete victory, They require extreme measures, and that's just not realistic in today's world. We can't destroy the country of Iran at the cost of 500,000 civilian lives and 180,000 U.S. soldiers' lives, which was the cost of defeating Germany in World War II before there was total regime change. So what is more likely is some kind of messy middle ground. Some wins, some compromises, and investors, at least for now, seem okay with that, as long as this thing doesn't spiral. Now, all of this is happening right now as earnings season is about to start, what should be a very big and consequential earnings season. If companies come out strong, and more importantly, if their guidance shows confidence despite everything that's going on, that could be the signal the markets are waiting for to push higher and make new all-time highs perhaps within a month or two. But if not, then we're probably going to stay stuck in this volatile back and forth environment that we've been in really almost since the beginning of the year for various reasons. So here's where things stand currently. The economic foundation still looks pretty solid. Geopolitical situation, however, is extremely uncertain. What does that mean for the market? It's betting that clarity is coming, and coming sooner than later. The question is it right? If you are accessing this via YouTube and you found this commentary helpful, make sure you subscribe. I'll keep breaking this down as things develop. And curious, do you think the markets are getting this right, or are they missing something big and have gotten ahead of themselves? Let me know in the comments below. In the meantime, we are going to closely monitor developments for assurances that no recession is in sight. That is the one action that would truly upend markets going forward. Right now, there doesn't appear to be any real evidence of that happening, despite some concerns about recent economic numbers, particularly in the inflation front, where it's come out a bit stronger than expected. However, actually a bit stronger than the previous month. It was expected because of what's going on in the war. In any event, we'll keep you updated as always. In the meantime, hope you have a very wonderful